Good morning, everybody. It's Eric Mashinsky, Gold Investment Letters editor, and it is January 29th. I have been quiet for a bit, and I apologize for that. I should have had at least a weekly commentary last week, but I didn't get to it. You can see I've got a bit of a tan, and for those of you up in the north suffering, here's a little bit of slice of some palm trees. I got some sun. I did some rejuvenation last week and just over the weekend and came back fresh. And I think you're going to have some good content coming your way throughout the week, including the fact I'm going to write this in the body of the email, but I am going to share even today in this email some of the recent Real Vision interviews that I've done that I think you guys will love if you haven't seen those yet. And that'll give you some, I think, terrific content, if you have the appetite for it right now. Then we have three things coming up that are going to be special that I will share in pieces with my elite premium and then free members, but everything from a special guest appearance that we had with Eric Sprott at the Phenom conference in 2018. I'm going to be sharing that with everybody. It's a special presentation that has not been distributed. It was only really shared with paying members and with people that were at the actual event. But I realized, and rewatching it actually right now, I just started it back up. I'm like, I've got to share this with people because Eric had some jewels of information in that presentation. And also, I completed an interview last week with Rick Rule on the Real Vision platform. That is going to be very good. It is incredible. So good that the Real Vision folks actually asked me if it was okay to put that behind the paywall on their paywall for their subscribers. They usually like to do that for at least a week as like a bonus to the paying members before they put it on YouTube. And I said, sure. So we'll have that out soon, sometime probably next week. That'll go to the premium members first, just for a courtesy. And then I'm going to share that one with all of you within the next 2 weeks. And tomorrow I have an interview with Rob McEwen that will go through the queue as well. That one might even come out before Rick that I can share. We'll see what ends up happening. If it's as substantially fantastic as the guys and everybody else and I thought with Rick, which is a different angle on things. I am doing something unique with the titans of our industry. And in the interview process, it's instead of just what are your thoughts on this market, that market, this investment, what's going on with your company, it is who are you? Where'd you come from? How'd you get into all this? Give me some stories, and you're gonna love them. You're gonna love them, and I'm really hoping that with Rob we get the same sort of cool stuff that shakes out with that process. We will. I want to address in the video, and I'm going to mention this in the summary preview, a couple of my comments and trades that we have open here. If you've been following, I've made two erroneous calls, I would say, so far on things that I highlighted in the free letter. I'm going to give you updates on some of the individual names and the smaller companies like the Carlisle Commodities and the Phenom Resources and the Giga Metals and all those, and the ones that I haven't even touched on in a bit. That's coming in either print form and or worst case, I'll have video commentary on those companies and tell you which ones we're getting into in those videos for you, those of you that hold those stocks and have interest in those areas. But we have the trade, the 3x trade really is what I call a staggered trade that we did in Lithium Americas Corp. And why don't I just share my screen? I think that would be the best thing to do and show you a chart on this for those of you that got involved in this not long ago. So this is Lithium Americas chart. And so what I had suggested, and it was going back, this is where I believe we started our purchase with the extreme fall off and oversold nature of Lithium Americas. We ended up coming in back in October in a first tranche. It's a 3-tranche trade. So what I say in those cases is like, say you were going to invest, you have $100 grand you want to put in the trade, or 10 grand, or 1 grand, or $1 million, it doesn't matter. It's a liquid stock. You could do this institutionally, whatever. I've had an incredible amount of success with this three tranche approach. So meaning tranche one, as it gets really oversold, we buy an initial third. So you have, okay, I have 100 grand earmarked for the trade. I'm buying 33.33 right here. It was probably in that 7 or a little lower. This is US dollars on Lithium Americas. The idea with some of these, when they are extremely oversold, is that you could go a little bit further and continue to extend, way overextend too far. And then you get a violent sort of a pop. And then, you have one case where, okay, we take the first stab at it right here. Let's call it, I don't remember the details, guys, sorry. I didn't double check before I shot this. I just wanted to get an update out on it, but say it was around $7 US. I also mentioned some option trades around this that have pretty much, they're way underwater. So, this is where I've been off so far on this play. If you bought the stock outright, you have more flexibility on this. But so tranche one here, I came in with a second tranche buy, I believe, on this dip. Okay, I'll confirm that, which meant another 33.333 goes into play on the second dip down where we were looking at it in the 5s. And we have one more piece of dry powder. So in these cases, though, what I like to see is more of a decline to buy a tranche two, like right here, and then get that spike so that with your cost average, you can literally swing trade and flip out of Lithium Americas for a 30-40% profit in days to weeks. That has been a common thing. This one happened to not go down, as much as it would have been ideal quickly. Instead, stabilized, went sideways for another lower low, which is kind of like in these trades, more of a worst case scenario. So you adjust to that by taking your second tranche in. Now you've got a lower cost average. I'll confirm these numbers and what that also looks like at the end of the day with this trade. Because if you have something roll here and then you get the cost average in, and this is still in play, because I would buy my third tranche and am buying it today. This is a daily chart. So say we bought some at 7 and we bought some at 5 something, under $6, whatever it was, and then here at 450, and you've got a cost average all in all in the high 5s. That is where I would see this thing minimally bouncing back to on a recovery, which would be, in this case, more of a very nominal profit or loss scenario instead of a very good return, strong return, robust return scenario. Let's look at the weekly chart to see where that stands. So we're very oversold on the RSI in the whole lithium space. And so this is not my area that I've focused on much over the years. As you guys know, I've mostly avoided lithium, but it is a viable area and these stocks have been destroyed. So these are more bounce plays versus a bet on everything coming back into a new bull market. I mean, look at this. LAC has gone from 24, $25 down to 5 again, under 5. And this is getting a bit overdone. I mean, this is the monthly, which could get more extended, but before it does on the weekly, I think we're going to get a pretty good, pretty violent sort of a bounce. And on the weekly, you can see that we could easily go back to like, somewhere in this area, which would be the high 7s would be the first case. And then even if it takes a little longer, still closer into the 9s is also possible. So that's why I'm buying a third tranche, because all you really need to do, if you followed the whole trade and you bought some at 7, you bought some at 5.5, you bought some at 4.5, or whatever it is, 5.75, 4.5, we get that thing back up into $6 area, then you're profitable and you get out of the thing. And we're going to move on and call it a little bit of a stressful, modest profit and move on for our time. If you're listening to this for the first time in this trade, now is a fantastic time to take your initial. I would buy half of what you want to buy and leave a half for an insurance policy just in case we have another leg down, but I don't think that's going to be the case. So that I just wanted to update you guys on, as well as the fact that I was off a bit so far in what I've been talking about with the potential for a pretty big move percentage-wise in a lot of the really small mining names. This isn't really GDXJ territory. That's too big. Most of these companies are over $1 billion market cap. But my thought was that we would start off, we could start off from these tax loss lows is when I started, priming the pump on this theory. But I got more pronounced on it in here. And, so especially when we had that pullback in December, this is where I was saying there are some of these smaller ones they're penny dreadfuls, as Rick Rule calls them, that have fallen off so far with no volume, just no buying, nothing but blip selling, but bombed out, that I think would make a big, sort of 50, 100% recovery in price terms, even with minimal volume in January, early February. Now we're at the end of January and we have not seen that. We saw the year get started out and weakness in the miners in general. And that's meant that has kept major lethargy in some of the smaller names. So I'm just acknowledging that I've had a couple of things off in the last quarter with some positioning. This is why also I am very much in the mindset that if you are accumulating value in the gold mining space or silver miners or even in the base metals or platinum, palladium, anything, in the smallest of the small juniors is where I see the biggest amount of value. I hate to say that, it sounds insane because you're talking about penny stocks, but some of these assets that we're able to buy for nothing, I believe this could be a once in a lifetime buying opportunity, but you can't be looking out for 30, 60-day results. It's just, I was putting that out there as, these are long-term investments, but you very well may be able to flip some of these for, extra swing trade profits. That has not come true. It doesn't mean that it's not about to. We're in a position with gold and the miners. I think they look very good for a bounce. GLD, for example, is right above support. We closed, one thing I was correct about is we closed at an all-time high on the December monthly chart. We didn't close above 2100, which is what I want to see. If we close at another multi-month high in January, which is coming up obviously this week, that would be very bullish for me. And I really am going to be paying attention to that closely, even if it's not quite above 2100 yet, and we're not ready to start to sprint. Gold is going to have one of two, I think, outcomes as we go through the year. I don't see a tremendous amount of downside risk, which is the good news. But on the upside, we're either going to have a bit of a surprise move that shows this breakout once and for all above the 2100 mark, where we've had these subtle indications with one or two monthly closes above it, and then gold starts a run that is going to be substantial to a minimum of $2,700-$2,800 over the course of 6 to 9 months type of time frame. It'll happen pretty fast when it's ready, or we will continue to be in a sideways range bound scenario, teasing the highs, coming back down into some lower highs, and not yet ready to break. This is the key chart to me. This is the monthly 10-year chart. Look at this. This is the 4th attempt at this area, which is why I think that the odds are in our favor on a quadruple top that we're going to break this. But there's the chance you're going to see a little more frustration over the coming months on a dip back down, and nothing crazy, but we could, for us to be driven crazy, some of us who've been in a 3.5 year now bear market in metals and mining stocks, you can want to shoot yourself if it just does something simple like that and you're at the end of your rope. I would encourage you to just take a step back and realize that these markets, they're going to happen when they happen. And so what I am saying today is, with dry powder, it's not like all in time yet. It's like continue to chip away and accumulate selectively in bargains in the industry. and make sure that you are positioned nicely so that once this does break and we start to see the dam lift on the mining space and we see the capital flows confirming that we're on for a new season, a bull cycle, you'll hear it from me plenty. Trust me, when that comes. We're not there yet. I thought and think we could still be right on the precipice, but I'm not sure. I'm going to wait for evidence. You know, that's the only thing I can tell you at this juncture is appropriate. I'm not trying to pump the price of gold. I don't have that power. It's too big for the gold investment letter to make a mark. But what I am going to do is have updates for you besides these amazing interviews and things that I want to share with our free e-letter readers. Some of these things, in addition to that, the premium members are getting, and the elite members certainly. There's not much room in the elite membership, but which, you know, that is really focused around, just for those of you that might be curious, because we have a lot of new subscribers here. The elite service is for high net worth individuals and even pseudo institutions, family offices that want deal flow in these plays. I mean, we've been socking away small private placements in companies, 400 grand, 700 grand, $1 million that we take and get a full warrant for 3-4 years and no accelerators on those, discounts to market, and take our positions that way. And then that way I do the diligence on the deals, I vet them. I'm usually the lead investor on the round and share that with the elite members. And because some of these are smaller plays and things like that, you know, premium members sometimes get the option to participate in those placements. I generally do not share this information with our free e-letter, which is a large amount of people. But premium members get a whiff either for those placements from time to time as they expand and we have more availability. But our elite members are here for the long haul. So we're planting seeds in deals where we will make, you know, 10x potentially more on some of these stock investments and then add another 9x on top of that just because we got the warrant. Or, you know, 5x that it goes up and we add another 4x on top of it because we have the warrant, plus a lot more flexibility with how you manage the position, take profits when you do that. If you're a high net worth individual and you want deal flow, you can join the elite membership, and we have 2 slots open. It's usually pretty full. We have a maximum of just 25 people there. That's on our subscribe page on goldinvestmentletter.com. But premium is an area that, for those of you that like any of the content coming through here, coming forward even, because we have a lot of new subscribers actually, Gold Investment Letter has been actively recruiting new eyeballs all of 2023. And the amount of content that I put out comes in ebbs and flows for you, but there will be flows. And I think we're about to have a flow coming. And if you really like what you see, then as far as some of these individual ideas and names and other trading opportunities and or just things that I'm doing, you know, the premium membership I think is a real bargain. And it's, you know, it's a cheap way to test me out for 6 months. I think it's about what, $777 or something like that US. But you know, if you're playing around and you're actually active at all, you know, one transaction pays for that times many if I'm providing value. And I've been here for a while. I'm not going anywhere, and I'm praying recently I'm actually entering my prime phase of reaping such large financial rewards for my members in the next bull run, that we'll see where we go from there. But we have had some massive successes, you know, on and off for years. And that's going to come again, guys, for us at the Gold Investment Letter, even including everybody at the free e-letter. You're going to see some action. We've been dealing with this market for the last 3.5 years. We've had some deals pop off, but it's a bear market. And that is one thing that I've learned is the most important thing. And last thing I'm going to say, and I'll let you go, is that Jesse Livermore, one of the greatest speculators to ever live, in the book Reminiscences of a Stock Operator by Edwin Lefevre, one of the classics, talked about a story of going into an office. This is not verbatim, but going into an office with this old timer that was always around the office. And, you know, Jesse became one of the largest, he was like the largest independent speculator in America. And somebody would say something about Union Pacific and how the stock was going up, you know, so much. And the old timer would say, well, it's a bull market. And then he would come back and talk about some other play and how shitty it was trading. He's like, well, it's a bear market. So like he's basically saying, if you're in a bull, you're in a bull. And that's why everything, even these pieces of crap, penny dreadfuls, will rise in a bull cycle. And why even some of the best ones, we're seeing like I-80 is having a move today. I'm very positive on I-80 and McEwen mining, areas that you're sort of like in the mid cap, still even nearing a small cap. When you look at it, if you're an institutional investor, those plays, those are so solid. And, you know, but their action has been frustrating too, especially during 2023. But we're seeing some pops or whatever. And I don't, you know, we're not there yet for a bull that's going to kick into gear. But I do believe the bear market ended in, you know, late 2022 officially. It's been a frustrating 2023 that maybe the remnants of, or you could say the bear market has lasted, especially in the small ones. And, you know, these are things we have to be a little patient on for now. But the point is that we've been in a bear market. So if we're losing money on paper, my job is to try to find ways to minimize that, have some wins to free up cash to put into some of the ones we like that are just getting ridiculously valued for the day when it turns around that, you know, we're going to make hay. And that's one thing that I can tell you and I can promise you I'm very good at. When it's time to press the pedal to the metal, we will be doing so here. So have a great day. I'm going to leave it there and we'll chat with you very soon. Cheers.